Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, February 21st, 5:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Market state, we're in an uptrend since the O'Neill follow-through days on November 1st and 2nd. You can see the trend gauge over here. Yellow sub arrow beneath the green bullish arrow, as quite a few market leaders have come under pressure over the last week and a half. That could change tomorrow, and we'll talk about why in a little bit. And as far as the major indexes go, all five trending above the three time frames that we track. That's the short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average, with the exception of the NASDAQ 100 did close below the 21-day moving average today, but this arrow might be coming off tomorrow also, because let's go to what just happened. Mixed close today, but tech up strong after hours on a very strong and well-received earnings report by NVIDIA. The good thing about this is uh, kind of strange how everybody loves NVIDIA, but in the last week or so, everybody seemed to get bearish on their outlook for earnings, and the stock pulled back 10% this week since last week's highs. And that's good. 10% was the market maker move, and it's reclaimed most of that after hours today, back up near last week's highs and carrying most of tech, and specifically anything AI or AI data center related along with it. This after a very negative reaction to Palo Alto's earnings last night dragged quite a few tech names lower today. Here's the final numbers. The Big Seven down 0.25%, RG8 down 0.9. That's our 8 growth ETF composite. S&P 500 down all day. Fought with flat a couple times. Strong rally into the close on a failed breakdown out of the tight range that we're in today. We'll take a look at a 5-minute chart when we get to the charts. But a very strong close and following through to the upside after hours. Equal weighted S&P 500 up 0.2, NASDAQ 100 down 0.4, particularly hit hard where software stocks, and again, that's tied to the Palo Alto earnings report last night after hours, and no bounce on it today. It was down about 25%. Equal weight down 0.7, Dow up 0.13, midcaps up 0.2, Russell 2000 down 0.5%, Global 6040 down 0.11%, in-house GROTECTION down 0.66%, chiefly because of CrowdStrike and also NVIDIA selling off into its earnings report, but will recoup that loss tomorrow if this big pop after hours holds. Let's get into the charts. We'll start right off with NVIDIA. You can see at 7:28 after hours, up 8% after hours, after being down 3% today and being down 4% yesterday. So right back above the 8-day exponential moving average and within shouting distance of these all-time highs. That's leading the NASDAQ 100 after hours up 1%. Reclaiming the 21-day moving average, and also the S&P 500 after hours. We'll go to SPY to get a quote. After hours up 0.5%, so putting it right back near that 500 level. Here's the tight action I was talking about. You can look at a 5-minute chart here, and we traded in a very tight range up until about 1 o'clock. We had a little bit of a false move down here on a weak bond report which sent yields up, and the yields didn't recover. Then a false breakout higher at 2 o'clock. This was on the Fed minutes being released, and we sold off after the Fed minutes, but that was a failed breakdown versus yesterday and today's lows. You can see the strong rally into the close and following that up after hours. Good stuff here. Dow Jones Industrial Average. Let's go back to the daily chart. You can see how that rallied into the close. Also bounced at the 21-day moving average. Mid caps up on the day, reclaiming the 8-day exponential moving average. Small caps undercut but reclaimed the 21 as it bounced at the 50-day moving average intraday. Still below the 8, up slightly after hours. Let's go to the VIX. VIX was green most of the day, but sold off late, still above that 15 level and above the 200-day moving average. You want to see it break back below that 15 level. The dollar traded pretty tight most of the day, ended up down 0.9%. No real movement in gold. We won't show that chart. Let's go to Bitcoin, which had been rallying, a little bit of a pullback today, down 2.2%, still above the 8-day exponential moving average. Bonds, not a lot of action until that bond auction at 1 o'clock. 20-year bond auction was weak. Prices dropped, which means yields rose. Here's the TLT. You can see the price dropping there also. And on the daily chart, making a lower low, that means we're making a higher high on yields. And you see that is a high, even above last week's breakout level before pulling back. But it didn't deter stocks with that strong rally into the close. It was almost like somebody got a hold of NVIDIA's earnings report. That couldn't be, though, could it? TNX, the 10-year, back near the highs from last week. All right, that's our inter-asset correlation. Let's go to the tail of the tape. You can pause this. Weak bond yield, as I mentioned. NVIDIA up 8% after hours. Good stuff there. Third day down, but then a positive reversal on the day count. Second day below the 8 EMA, 32nd day above the 21-day on the S&P 500. Oils, home builders and utilities strong today. On the downside, regional banks and tech led by just really poor action by the software stocks on Palo Alto. We'll take a look at that chart. Bitcoin weak as well. In-house, we held a small position in BRT. It gapped down on earnings. We sold that, bringing our adjusted beta down from 0.89 to 0.85. Bottom line on the day, mixed close as value led again, money rotating out of tech into value. That money might be going right back into tech tomorrow with this reaction that I'm seeing after hours. As I said, tech up after hours on NVIDIA's earnings report. So let's take a look at the charts. We're going to start off with Palo Alto. And again, the -2, there's a reason why we use this, down 28%. Unbelievable. Closing near the lows of the day, right on the 200-day moving average. Their forward guidance was not good. Over 1,120% above average volume. This is why we use that -2 ATR rule when we size into earnings. This was a leading stock. It's not just garbage stocks that can get hit big on earnings, and this is a cover or a poster child for that. And then that trickled through to Crowd, which was our second, third biggest holding. Undercut and Reclaim closed near the highs of the day, but still down 9.7% on the day, and that took care of most of our losses or covered most of our underperformance on the day. Crowd down, Zscaler, another leader, down 14%. Sentinel One, another leader, down 12%. So you not only got to know when your stock is reporting, but when a big one in the same sector is reporting. Here's another CYBR, another big stock. Now this one, Undercut Reclaim the 50-day and closed its loss to -2.4% on the day, which is pretty impressive. Good growth numbers there, very high PE as well. Same situation as Crowd. Let's go to see what this did to the ETFs. Here's Hack, the cybersecurity ETF, down 5%. CIBR, another cybersecurity ETF, down 5%. IGV, which is the broad, mostly big cap software, down 2.8%, breaking the 50-day moving average. And the Cloud, CLOU, down 2.17%, two gaps down as cloud stocks really getting hit over the last couple of days. So that's some sector action. Let's go to what we're holding in-house. Uber, consolidating right above the 8-day exponential moving average. That looks very nice. NVIDIA, obviously. Crowd, we already showed that. And Lilly. Those are our remaining 4 individual positions. We'll be looking to add some things if this tech rally lifts some pressure off the market. You can see the undercut and close right on the 8-day exponential moving average for Eli Lilly. Some strength today. GoDaddy, GDDY, undercut but reclaimed the 21-day moving average. Ralph Lauren, very strong after its earnings report, something we're keeping an eye on. And quite a few tech names undercut but reclaim their 21-day moving average by the end of the day. We'll be looking to start some positions in them if we get follow-up strength to market tomorrow in the market. Anything else I want to cover? Oh yeah, Kava. No reason for this that I could see at all. Wingstop reported earnings, but initially gapped down and closed mid-bar down 4%. Kava, no news that I saw at all, down 10.5%, breaking the 21-day moving average. Another leading stock just broke out of a cup and handle base, pulling all the way back to the pivot. This is one of the things I don't like about IPOs. After the lockup period, this thing started to rally. This was the lockup period, and right here, maybe just somebody with some shares just sloppily decided that today was the day they were going to get out of them, and supply of shares overran demand. Demand was double average, just not really normal behavior. And you've got earnings next week on it, but shame, this was looking pretty good. We'll see if it can recover, and then we'll see what earnings says next week. And with that, we'll wrap up the video for Wednesday, February 21st. This is Don Vandenbord with Revere Asset, telling it like it is. If you're interested in reaching out to me, don@revereasset.com is the email. If you're interested in becoming a client, my partner, Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio is named GROTECTION because we grow assets by getting as fully invested in the market as we're comfortable with under favorable conditions and protecting during downtrends such as the pullback last fall. And also, if you look at a weekly chart here, the big 2022 bear market, we're outperformed, lost significantly less than the market because we were below this black line, the 200-day moving average. That'll do it. Thanks for listening and have a great day.